Hello friends, today I am going to tell you about a concept called NAV in the mutual fund industry. So I'll give you an example. Some of you might have invested into some equity mutual fund scheme, or for that matter into a debt mutual fund scheme at a certain price. That price is known as the NAV, which essentially stands for net asset value. So you might have entered into a scheme at a NAV of rupees 20 and you exit after some time at the NAV of rupees 22. So you are essentially trying to evaluate the performance of a scheme in a certain time period using certain price points. That is NAV, your entry price point and your exit price point. So let us understand in some more detail as to what is NAV, how it is calculated, and what are the frequency of publication, what are the rules around it, and how you can get benefited by it. Let us understand this. So NAV, it is essentially the market value of the entire portfolio. If you are investing into some mutual fund scheme, that scheme money is invested into some equity market or into the debt market. So if the market falls, then the market value of the entire portfolio falls and the NAV also falls. Similarly, if the market rises, the portfolio value rises, then the NAV also rises. That is essentially the understanding or the meaning as to why we say that NAV is the market value of the entire portfolio. Now, what is the calculation? Let us come to that. It is a simple one, don't worry. The simple formula is that you have to keep the total market value of the scheme in the numerator divided by the total number of units outstanding. Now, what do you mean by the words called units outstanding? I'll explain you. Whenever I, as a mutual fund company, enable the buyer to buy the mutual fund units from me, I will be issuing units to him. Similarly, if another investor on some certain day or on the same day he had invested long back, he will take his units back by selling the mutual fund units back to the AMC. So I will be taking his units and extinguishing it, means those units are no more and I will give him back his money. So essentially whenever on a day, on any one day, on the same day I mean to say, some buyer is there, then I as AMC will be issuing the units go up, and same day someone is selling the units go down. So in net I have a figure called total number of units outstanding. So continuing with my earlier example, I keep the total market value of the scheme in the numerator divided by the total number of units outstanding. So let's say, suppose the scheme AUM is 200 crores. That is the market value divided by total number of units. Now what's the total number of units? It is 10 lakh units outstanding. So 200 crores divided by 10 lakh units. If you divide, you will get rupees 2000 as the NAV. That is the NAV calculation. Now how frequently is this 20 rupees NAV, or how frequently is this NAV getting calculated? It has to be calculated on a daily basis. Now what is this daily? On every working day, on every business day, on whichever such day the market is open, whether it is equity market or the debt market, whenever they are open, the NAV also has to be calculated. Otherwise, mutual fund scheme cannot show you the true value of the portfolio, isn't it? It's so natural. If the market is open, then my portfolio as a fund manager, it will go up and down. So I should be showing you the true value of your units. That is what NAV is meant to show you. So NAV is calculated on a daily basis, and NAV also has to be published on a daily basis within certain timelines. What is the timeline? As per SEBI rules, all the mutual fund companies have to publish the NAV maximum by 9 PM on the same day. So let's say if the market is open today, equity market, debt market both, then maximum by 9 PM today, all the schemes NAV has to be published on a website called www.amphiindia.com. What is this Amphi India? The word Amphi stands for Association of Mutual Funds of India, which is a industry body of all the mutual fund companies. So SEBI has made it mandatory that all the schemes of all the mutual fund companies, they have to publish their NAV on the same day, maximum by 9 PM on the website of amphiindia.com. Only there is one category called the fund of funds, that's a separate category of a mutual fund scheme, which has been given the leeway to publish this NAV maximum by 10 AM the next working day. But apart from that, on the same day you can get the NAV of all the schemes. So I hope, my friends, that you've understood the concept of NAV and the working of it. How is NAV calculated? What's the frequency of calculation? What's the frequency of publication? What are the timing and the rules around it? See you in the next video, guys. Thank you.